Good morning. I want to talk briefly today about limit orders. Limit orders are another very critical tool that should be in the arsenal of every trader of stocks. These things do apply to investing as well, but I'm going to focus on the trading aspects. I spoke last week about stop loss orders, another very important tool that everyone needs to use, but equally important are limit orders. What limit orders allow you to do is have a much greater level of control over your entries and exits in and out of trades. I'm going to talk about the long side and the short side, but on the long side, what a limit order allows you to do, it allows you to specifically indicate the most you are willing to pay for a share of a stock. So when the goal being to buy low and sell high. So typically, when you're going long, your limit order is going to be placed below the current trading price. So you're waiting for the stock to come down to your desired level, and then your order will be executed at that specific price, and then hopefully the stock will go up from there and you can exit at a much higher price. So as traders, we want to go into each and every trade with a plan. You don't want to go into a trade willy-nilly or jump on a trend or something like that. I mean, you want to have specific levels at which you are looking to enter and specific levels at which you're looking to exit. So again, on the buy side, you want your limit orders to specify those specific levels, and your stop losses as well to specify a level at which you want to exit if it goes awry. So on the short side, it's the exact opposite. It's the least you are willing to sell for. So unlike a limit order on the buy side, on the sell side, usually your limit order is going to be above the current trading price because you're waiting for the stock to go up to a certain level, then you get in short, and then hopefully the stock goes down from there, and that's where you make your money. Just a few things I also wanted to mention specifically on the short side, and a few kind of little tricks you can use going with limit orders. So a lot of times, especially if you are interested in trading or specifically shorting very volatile stocks, you will encounter an issue in finding shares available to short with your given broker. Some brokers are better than others of having shares available, but if we remember, when we short stocks, we need to borrow shares from the broker, and then you're going to give them back essentially at a lower price, and you keep that difference. So you'll run into an issue of finding available shares to borrow, and you can use limit orders depending on your broker. Some brokers will just tell you, hey, we have 100,000 shares available to borrow, or whatever the number may be. Other brokers don't readily provide that information. So what you can do is you can place a limit order to short a stock, and you place the limit order way above the current trading price. So you're not going to get the order executed anytime soon, but it's just a means of determining whether or not your broker has shares. Because if that order goes live, then that means your broker has shares available. Also, that same strategy, that same maneuver, let's call it, is kind of a way of reserving shares. So a lot of times, if you think that a stock has some decent news, or might have a catalyst, or might be potential spiker, you can set your limit order very early to a level that you may want the stock to get to. So let's say you were comfortable shorting a stock at $5 a share. It's currently down at $4 a share. Well, you set your limit order very early at $5, and you're reserving those shares very early on. And then as the stock climbs and climbs, your order is still sitting there live with those shares kind of put aside for you. So a few little tricks there, but limit orders, generally speaking, you need to use these things. It gives you the greatest amount of control over your trades, over entering and exiting your positions. And the antithesis of limit orders are market orders, which you never, never, never want to use. Market orders are giving control over your entries and exits to your broker. You're essentially just saying, I want 1,000 shares of this stock. You decide how much I pay. You never want to do that. You're going to wind up with very poor executions to where, you're going to find yourself in the hole right off the bat. So never, ever use market orders. Stay away from those. Limit orders all the way. Hope everyone has a great day.